morning everybody, it's Chris here from Serene Education with the 4 majors analysis update for the 26th of March 2012. Okay folks, let's have a look at the 4 majors starting with Euro against US dollar. Let's have a look at the weekly. Let's see what we finished off with. Well, pretty much to the upside. In fact, back up to this 20 period moving average that we've tested previously on a number of occasions over the past couple of months. But yeah, definitely an upside candle following the almost a hammer pattern, hammering on a nice little bottom there. Bit of an exhaustion to the downside, more buying coming into that particular candle previous week, and then last week pretty much taking that and moving higher. That's reflected on our daily charts. You can see quite clearly we had some upside movement to start with. However, the last going into Friday's session, we had a lot of spinning tops, indecision. We wanted to see a decision candle. However, the one port of call, everything's in our favor pretty much on a daily. We have our 2 smaller time frames. You can see on Thursday price fell price actually traded through the 20 and right down to the 50 period. However, closing above the all important 20 period moving average. On the consecutive days before that, we saw Wednesday and Tuesday and Monday all finding support above that level. So that was definitely going to be a nice little bounce area, and price actually really built on that going into the end of Friday's session. However, there is one very unique area that we needed to see, and that was we needed to see a break and close higher than this all important 13,300. On a number of occasions, price has been here to test it and failed. If I just move back, you can quite clearly see through the months, the latter part of Jan through the early parts of February, we had a break of through the latter part of Feb, but that failed to maintain. We would like to have seen a bounce over here. That never came. We saw price breaking low again, and it went on to test lower lows again. But just recently, we've seen price moving higher and testing the 13,300 quite a number of times over the past, this month in particular. But we do need to see if it's being breached. And then everything will be in our favor. For definitely a break and close above 13,300, then we should really realistically be looking at 13,400 as our first target to the upside, and ultimately back up to 13,600 as that institution moving average becomes the next potential target. Way up here, you can quite clearly see a lot of consolidation through this part here, which brings us back to 13,600. So let's wait for a nice break above 13,300. Failing to get that, then we could go back into a consolidation with potentially another return to 13,200. But ideally, we'd like to see 13,300 being broken and support being found as soon as possible for this pair. This swing higher, or Friday's close, if you want to take the wicks, that would be the general consensus for the trend. Otherwise, you can take body to body, and if you want to look at the body to body, then you're looking at something like that. So going to squeeze the upside, something's going to give. Whether we get another bearish engulfing here and see price rolling lower, that remains to be seen. However, as it stands now, we want to see 13,300 being breached and closed. That will give us a clear indication that upside is still favorable, and then we should be looking for these highs here at 13,400. The other scenario being failure at 13,300, a bearish engulfing, or shooting star, or bearish orami, an evening star of some sort like that at this level, at this clear strong resistance, then we should be looking back down to price support and resistance. In this case, 1320 would be our first call. A break and close lower than that, take us below all the moving averages, and then we should be looking realistically back down at 1300 is another target for the remainder of the future. On to sterling. Let's have a look at the weekly. Where did we finish? Well, here again, moving sideways. Not a lot of gains, but we're being now pushed into a corner. Clearly see this pair really being squeezed into a corner, and the 50 and institution moving average looming above like a massive brick wall. So, and you'll notice though, for almost 2 months now, we've had hesitation at this level here, and that level happens to be the 5900 mark. So you want to put these massive or very strong support and resistance levels onto your chart. So in this case, you can see quite clearly that price, even though it's traded through, has never been able to close. Put that in massive capital letters. It's important. Never closed once above 5,900. Okay, it's gone through on a number of occasions. but in doing so, never closed once. So this becomes a psychological, very strong support and resistance, and that actually shows up on the chart quite clearly. 50 period moving average acting as a ceiling. We had this nice little shooting star here, exhaustion candle at a ceiling level, and price reverts to the downside. However, after something like that, quite a significant one, you would have thought that price would have moved a lot further, at least moving down to these prior levels here. That failed to materialize as sentiment was still favoring upside. So we had this bullish engulfing, and price moved back up, particularly last week, back up to that 5900. Very small trading range. Spinning top, equal sides on either side. This is clear indecision. We want, as like like the Euro US dollar, we want to see a decision candle, and this indecision coming at a ceiling level, very strong ceiling level, and we're pretty much stuck in this consolidation pattern. So we want to see two scenarios happening. The first one being upside. As it stands now, we have blue across the board. We are trading above the 20 period moving average. Ideally, we would like to be trading above the 50 as well, but we're being straddled now between these 2 points. So you can see quite clearly consolidating these as the price or the moving averages start coming together. We have the major institution moving average above us, and the 50 period moving average also capping price. But the 50 also moving lower. You can see it's going to be dragged to the downside. Not a good sign, that, because especially when you're going into a tight squeeze like this, it could mean that the ultra momentum could be bearish in this case. And the longer we go sideways and we fail to break through this, the more likely is we're going to start seeing bearish sentiment starting to creep in. Okay, ideally, if you're going to start testing major resistance and support levels, you want potentially, ideally, you would like to see price smash straight through it on the first occasion. But if it fails to do that, you would expect price to actually break through it on the second occasion, not after headbutting itself for literally 2 months. It's just not doing anything. So we want to see an outcome, and that outcome has got to happen. And the longer it goes and headbutts itself along this 5900, psychologically people are going to say they're just going to give it the ghost, and you're going to start seeing a lot more selling contracts being purchased, and ultimately price will just roll over. There seems to be a lot of hesitation, a lot of resistance above us, so it's got to do a hell of a lot. It's going to be some powerful sentiment that's going to break through this psychological level. On the daily, you can quite clearly see that. A lot more blue than red on our CTC, confirming that. We are in upside movement, but we're consolidating sideways. 1565, price has been capped between 2 points. You can quite clearly see we've pretty much been channeling between 1565 and 15900. So that 900 very strong resistance again. So I'll always put those areas in so I can see it's like, on the page. You can see quite clearly here the institution moving average also coming into play a lot of the time now. Most of last week in particular, the whole of last week we had hesitation in between this one, moving up, moving down, indecision, bearish engulfing, and going into Asian session last night, very indecisive, very small trading. Top, yeah, it's just a very spinning, but it's above the institution moving average, which is great. So if it can remain above the institution moving average, then we could see 5900 being retested quite shortly. So use it as a stop measure. If we keep seeing price trading above 15,8500, I think it is. Let's have a look. Yep. Then look for support. Look for a healthy floor to be built, and then we should see a reattempt of 5900. But what we want to see is a close, a physical bullish engulfing close above 1500. So psychologically, we can see that the momentum is still favoring upside, and we can build on that 5900 going through the remainder of this week. Then the upside targets will definitely be in focus. Clearly, the next port of call, if we do get that, is just below the 1500 or 1610, roughly around that area. Will definitely be a nice little target area for this pair, if and when she's actually broken in that 5900. The other outcome would be bearish engulfing, and then we could see price falling lower, testing potentially the 15800, 157,500, and ultimately back down to 156,500. Next up is US dollar Swiss franc. Let's look at the weekly. Let's have a look. Okay, so previous week we had an exhaustion candle, and we saw last week pretty much carrying on with that downside move. This bullish engulfing out, pretty much topping out and forming a lower swing. So this swing over here lower than this one, which is lower than that. So you can see price actually pretty much favoring downside at the moment now. It's clearly fighting with the 9100 mark for a considerable period of time. A lot of support through one part, and then breakthrough lower. Is this now genuinely going to like to see 9100 being the ceiling level now, or the 20-period moving average, which happen to be price support? This got to be ceiling, and we should see price just falling lower now. And our first target or protocol should be roughly around here at 89.50. So sentiment for weekly still looking negative across the board. 50-period moving average and that 89.50 would be our next potential target as we see price rolling over on that pair on the weekly. It should be mirrored on the daily. You can quite clearly see here towards the top we've made up that that long wick we saw on that prior candle, the exhaustion candle. Sitting level here noticeably, and then a breakout, but that failed to take initiative and build on that. It broke low again, and you saw price running down towards the 9100 again, and that was support. And now we had a breach on Friday. We saw a breach lower. We want to see 9110 now becoming a ceiling level. So this Friday is bearish engulfing now, engulfing all of this indecision here. And clearly 20-period moving actually in the ceiling, and now we have a lower swing. So if that's genuine swing low, then ultimately what we're looking at is potentially this occurring now. So we have the initial move, the pullback, and now look at the continuation. And the continuation will take us back down to those lows we had previously at 100% here, just below the 89.50 mark would be back on as potential target for this pair. Below that, back up to the install. Below that, down towards at least the institution moving average here at 88.50. So as it stands now, we should see price building on the momentum. We want to see price, especially on our daily, let me just take us back, using the 9100 now as a ceiling level intraday. So look at 9100 being our ceiling level. Price shouldn't close higher than that. We want it to stay below 9100 to confirm that it's now a ceiling, and then we should see price building on those shorting contracts, and we should see at least a fall down to 50%, 61.8, ideally 100% of the initial move, which is this one over here, these three bearish candles, which take us roughly down to the 89.50 to start with. Last pair of the day is US dollar Japanese yen. Let's have a look and see what's been happening. Weekly, a lot of momentum to the upside, and then last week pretty much stalling, but that's still coming at a very strong resistance level. Prior resistance at 8400, clear ceiling level for this pair over the weeks, months in particular. If I just zoom out, you can quite clearly see that since we went sideways between the 80 and 80, you can see quite clearly the price was bouncing between 80 and the 84. Genuine ceiling level, so price is definitely going to be looking at that, or was looking at that as a potential target area from these lows here. Definite target, and that's exactly what's happened. We've gone into this high at 8400, and price has pretty much just pulled back. Daily definitely shows that hesitation quite clearly on this time frame, and we want to see price now trading above that in order to see any further direction for the US dollar against Japanese yen. However, this pullback taking us back to prior support and resistance here. Quite clearly see we had a bit of a hesitation here, support, and then price built on that at roughly around the 82.30 mark. We saw the daily range closing very, very indecisive with the spinning top here on Friday, and the Asian session has pretty much been trading higher on that that bounce. So if the 20-period moving average and this area here at 82.30 can maintain, then obviously we're going to see price building on that. So nice bullish engulfing here would definitely look to see price moving back up to 8400 for a reattempt of that strong ceiling level. Failing that, we see price moving lower than the 20-period moving average, and the support here would definitely indicate that we should see further indication of further downside, and that downside would be here 38.2 at the 8100. You can quite clearly see 23.6 as that psychological barrier, and price is hesitating at it. We want to see any spinning, any indecision candle. This is an indecision candle here. We want to see a decision. So are we going to get a nice bounce on this 23.6 to the upside again, or are we going to get a break over to see 38.2? That needs to be happen. So on a daily, we need to see that clear range, or that occurrence happening, a nice bearish engulfing to see further moves to the 38.2, or we want to see a nice bullish engulfing to clearly indicate to us that we should be looking for another reattempt of 8400. for the remainder of this week. That's it, guys. I've kept it nice and simple. You need to keep it exactly like I've done. Keep it simple. Look at where price has been trading on the overall trend, and see if we're getting any noticeable movement in the direction of the trend. Once that's confirmed, we want to see potential breakouts, areas where we can see prices really moving with a lot of momentum, and we want to be trading the momentum. So look for these little breakouts every now and again. Here, clearly on the US dollar Japanese yen, we are trading at a support. We don't want to second guess the market. We want to be moving with the market. So let the market dictate where it wants to go, and then we act on it. So all we're looking here, particularly in a daily, is we want to see a bullish engulfing by the end of close today, or a bearish engulfing at close today. Definitely tell us where price is looking to move for the remainder of the week, and then we'll trade it. It's that simple. Okay, so as it stands at the moment now, you can see that the US dollar Japanese yen, massive move to the upside, swing high, swing high, swing high, and we've had a break of that swing high, but we are now testing a price support. A break of that will start a lower swing, and then we could potentially, I'm just saying, the potential outcome could be back down to 38.2 to 50, which is a 50 period moving average, a break of 61.8. It's a massive fall to the downside, but you can make some clear profits in between these ones. The other likelihood is, as I mentioned before, it's for a nice bullish engulfing on the daily, engulfing this indecision candle, but coming on support. Okay, we've seen we've bounced before, bounce again, a psychological 23.6 retracement error, and then we should be looking back up here at the 8400 as our first target for the remainder of the week. Okay, so that's it. I hope you have a fantastic trading day. Not a hell of a lot of news out today, but that doesn't mean to say that still waters run deep. There's a lot of movement in the underside. So look at the undercurrent, see if there's a lot of momentum, wait for the momentum, the direction, and we'll trade it. And then I'll see you first thing tomorrow morning. Until then, trade serenely.